Significant trouble today. Good afternoon and welcome to the March Crop Production and WASDE briefing. My name is Lance Honig and I serve as chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We are very pleased to have USDA's Deputy Secretary Vaden joining us today, and we also welcome Dr. Cindy Nickerson, USDA's Deputy Chief Economist. Sir, I would like to point out that we have a number of visitors with us today from the National Corn Growers Association. I think they're mostly seated on that side of the room. So welcome to all of you again. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB's statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions, and NASS will host a social media event at 1:30 Eastern Time this afternoon. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn things over to Anthony Prilliman, Acting Crops Branch Chief for NASS. Anthony will be immediately followed by Dr. Mark Jekanowski, Chair of the World Ag Outlook Board.
Thank you, Lance, and good afternoon. I too want to welcome everyone who has joined us here in the room today, as well as those who have joined the live stream. All right, my briefing will be short again this month, since the only data we will cover today is the 2025 end of season sugarcane estimates. Looking at that crop, the harvested area is estimated at 946,000 acres. That is down 0.3%, or just 3,000 acres from last month's forecast, but up 2.8% from the previous season. The average yield for the 2025 crop is estimated at 36.4 tons per acre. That is down 3.7%, or 1.4 tons per acre compared to the previous forecast, and down 2.7% from 2024. Total production at 34.4 million tons is down 4% from last month's forecast, but up 0.2% from the previous season. Now, this does represent the highest sugarcane production total in the U.S. since 2022. Record high production was estimated in Louisiana this past season. However, production in Florida was the lowest since 2021, and the state average yield was the lowest since 2018. I do want to highlight some of the upcoming reports that will be released over the next few weeks. Now, on March 11th, we will publish the price reactions after USDA crop reports and livestock reports. Now, both reports contain annual price reactions to USDA crop production, grain stocks, and livestock reports. On March 12th, we'll be releasing the tenure, ownership, and transition of agricultural land, also known as total. Now, this report provides a comprehensive picture of farmland ownership and farm economics. On March 31st, we'll be releasing the March 1st grain stocks and rice stocks report, as well as the prospective plantings, which, as you know, represents the first survey-based estimates of planted acreage for the 2026 crop year. On April 8th, we'll be releasing the crop production historical track records. This report provides historical estimates of acreage, yield, and production, and how preliminary crop forecasts compare to the final published estimates. And then we'll be back here on April 9th for the next crop production report. All right, as a reminder, on April 22nd, USDA will be holding the spring data users meeting at the Federal Reserve Bank of Kansas City. This will be a hybrid event, and additional information and a link to register can be found on the URL listed on this slide. Now, as mentioned earlier, Lance will be on X at 1:30 today for Stat Chat, answering any questions about the numbers in today's. So that concludes today's NAS briefing. I will now turn it over to Mark, who will cover the WASDE.
All right, thank you, Anthony. Okay, I'm going to walk you through the WASDE report. This month for March, relatively light month in terms of new information. Going to take a little bit of a focus on Southern Hemisphere, Argentina in particular, corn and soybeans. And I'll walk you through all of the major changes to the balance sheets for all of the key crops. Let's start with wheat. Global wheat production. This raised this month 300,000 tons to a record large global wheat production. Australia wheat production was lowered this month, 1 million tons. That is based on information from ABARES. Still, even with that reduction, that's the third highest crop on record for Australia. Other changes, Ukraine was raised 1 million tons based on official data from there, from Ukraine, and Kazakhstan raised, this is their also official data, second largest crop ever in Kazakhstan. So overall, global production up this month. Wheat balance sheet, a few changes here to talk about. Mainly, we talked about production, so supply up a little bit based on incorporating a small reduction in beginning stocks. But feed use raised 500,000 tons globally, and that reflects 1 million ton increase in the EU, reflecting a large crop there and a reduction in exports this month. And that is partially offset by lower feed use in Argentina, where they had a large crop as well, but also very high exports. Global trade up 200,000 tons this month. That is mainly higher exports from Argentina and Kazakhstan, reflecting large crops there. Partially offset by lower exports in the EU, again, reflecting higher feed use, lower exports from Russia, and lower exports from Ukraine as well, where despite the fact that their crop is large and was raised this month, they are experiencing some pretty difficult internal logistics getting the crop to ports due to the conflict there. Ending stocks down a little bit this month, 600,000 tons, but that is still a 5-year high global ending stocks level. U.S. balance sheet, U.S. wheat balance sheet, really no changes this month, just made a small change to our season average price forecast based on recent strength reported in the NAS price report. But at this point in the year, more than 80% of this crop is marketed. So any strength now is going to have really small effect on the overall season average price. And that's why you're seeing just a nickel increase in our season average price forecast there to $4.95 per bushel. Global rice production, really nothing to talk about this month. No change among all of the major global rice producers. But the balance sheet, global rice balance sheet, mostly this month, changes driven by India. Trade, global rice trade reduced 1.3 million tons. That is mostly a reduction in exports by India that lowered 1 million tons. And similarly, ending stocks raised 700,000 tons this month. That also is India. So higher stocks primarily in India. India's exports, so they were lowered 1 million tons this month, but still record high at 24 million tons. US rice balance sheet. All of the changes this month reflect changes in exports and imports, international trade data. Imports lowered this month 2 million hundredweight. That reflects a lagging pace of imports from Thailand. That's all long grain aromatic rice, which had been, especially last season, growing pretty strongly. This season, that pace is lagging a bit. So down 2 million hundredweight this month, and if realized, that would be down 3.6 million hundredweight year over year. Exports, on the other hand, also lowered this month, and again, that's all rough rice, all long grain rough rice. Slow pace of sales, primarily to Western Hemisphere markets, including Brazil, where we're seeing increased competition from imports. Including to Mexico, where we're seeing increased competition from Brazil into that market. So lower imports and equivalent reduction in exports leaves ending stocks unchanged. We didn't make a change to the season average all rice market price, but hidden within there is the other medium short grain rice price, which we raised 40 cents per hundredweight to $14.20 per hundredweight. Not enough to move the needle on the all rice season average price. All right, let's move into corn. Global corn production up 1.5 million tons this month. Argentina down. We'll talk a little bit more about that in the following slides. But that reduction in Argentina is more than offset by higher production in Brazil. That is based on a higher area estimate for first crop corn in Brazil. And Ukraine, based on official data from Ukraine, raised their production by 1.7 million tons based on both higher area and better yield. But let's talk just a minute about Argentina. Argentina, we adjusted both corn and soybean production. This is just a map of the major regions, major crop production regions in Argentina for corn and soybeans. As you can see, basically grown in the same areas, a lot of overlap there, not too surprising, just like in the US. But so this chart for folks who might not have seen a chart like this before, this is just what we call a rainfall trace. The black line represents average cumulative rainfall over the course of the period here. The green line is last year's cumulative rainfall, and the red line is this year's. And as you can see, things started out pretty good in through the month of December, and then we dried out late December into January, continuing into February. But you can see here that we received some timely rains along the way, but overall dry conditions throughout the growing season. Now averaging below last year. And this is the main crop area of Argentina. And then this slide here, moving ahead, is a little bit further south into Buenos Aires. Similar rainfall situation, started out above average and then dried out and has been trending below average for the past couple of months. Also, it's been relatively hot. Unfavorably hot periods. Not persistently hot throughout the season, but enough heat on enough days to cause some concern, especially when coupled with the relatively dry conditions. We also can look at the health of the vegetation health index here. As you can see, the red line that's way on the right side of that chart is this year, and starting out, fairly high, maybe above average, but has started to turn lower over the past few weeks, reflecting some stress on the vegetation, reflecting those hot and dry conditions. So with that, we've lowered our corn production forecast down about 2% from last month. Still, as you can see, far from a disaster. Still roughly an average crop overall, but not as large as we had been predicting previously. And soybeans as well lowered about 1% this month, again reflecting those weather conditions as we approach harvest season in Argentina. So now turning back to corn, global supply and use for corn. A little bit of an overall supplies increasing about 3 million tons this month, reflecting both that 1.5 million ton increase in production that I just described, and a 1.5 million ton increase in our carry-in, reflecting some back year adjustments on Brazil and India's feed use. So we're carrying in a little bit more this year than we were expecting last month. So supplies are up 3 million tons. Feed use adjusted slightly lower this month, mainly reflecting lower feed use in India and Brazil, partially offset by higher feed use in Vietnam, Ukraine, and the Philippines. Global trade raised this month 300,000 tons. Mainly reflecting higher exports by India to neighboring countries primarily. And ending stocks raised this month, global ending stocks up 3.8 million tons, and that reflects higher stocks in Brazil, Ukraine, and India, partially offset by lower ending stocks in Argentina, reflecting smaller crop, lower production there. U.S. corn balance sheet, no changes this month, and no changes on price either. This time of the year, kind of through January, we have roughly 50% of the crop is marketed or so. So now let's move into soybeans. Global soybean production down a bit this month, down 1 million tons. And that reflects Argentina, which we just talked about, 500,000 ton reduction there, based on both lower yield, which is partially offset by higher area, but leading to that 500,000 ton reduction for Argentina. And the other 500,000 is Ukraine, reduced based on a lower area estimate there. Global soybean balance sheet. Relatively small changes this month. A few things to talk about. Global soybean crush slightly lower this month. Couple things going on there. Mainly that reflects, so there's higher crush in the US, which I'll talk about on the next slide, offset by lower crush in Iran. And that's basically driving that global reduction this month. Global trade, exports down 400,000 tons. That is primarily lower exports from Ukraine, reflecting the smaller crop there. And ending stocks down, that's mainly lower ending stocks in India and Ukraine. So on the U.S. balance sheet, a couple things small changes to talk about here. U.S. soybean imports raised 5 million bushels this month. Small amount. We always import some, but this is just reflecting observed trade data. Imports mainly coming into the East Coast there. And crush raised 5 million bushels, mainly driven by strong domestic soybean meal use. And also worth noting, we raised our soybean meal extraction rate this month. I'll talk about that a little bit more on the next slide. So higher meal and lower oil from a bushel of soybeans. With higher imports offsetting the higher crush, no change in ending stocks this month, and no change in our season average price forecast either. So let's talk briefly about soybean oil supply and demand. As I noted, we adjusted our extraction rate. So despite the fact that crush is up 5 million bushels, soybean oil production is down 20 million pounds this month, reflecting that lower extraction rate. So again, more meal, less oil from a typical bushel of soybeans. Other major adjustment we made this month is soybean use for biofuel, lowered it 800 million pounds this month. Just based on pace to date, relatively, not living up to our earlier forecasts there, but we still have strong expectations to reach that 14 billion pound soybean use for biofuel, depending on the 2026 mandate, which we expect to see by the end of the month. And so that lower biofuel use just goes into mainly into food, feed, and other use, with a small increase in ending stocks. All right, so let's move into cotton next. Global cotton production up 1.1 million bales this month. Driven mainly by an increase in cotton production in Brazil, based on data reported within country there. Also, 500,000 bale increase in China. We continue to raise that crop. This increase now is based on classings data. So this is the reading the volume of cotton as it's coming in to be classed, and it continues to exceed expectations. At this point in the year, the classings tend to drop off, but we'll continue to watch that over the next month or two to see if the crop, to see if it continues to increase. But for now, we raised it 500,000 bales this month, up to 35.5 million bales, and that would be up more than 10% year over year. Argentina reduced a little bit this month, 100,000 bales, just area reduction from their Ministry of Agriculture. Cotton supply and demand, small changes this month in terms of the global balance sheet. Cotton consumption lowered 100,000 bales. A couple offsets there. We actually raised China's consumption 500,000 bales. Big crop there. But that was more than offset by lower consumption across many of the other major consuming countries. Global trade, cotton trade raised 200,000 bales this month. India imports increased about 800,000 bales. So there's incentives within India to import cotton at relatively lower world prices. And ending stocks, cotton ending stocks raised this month 1.3 million bales, and that reflects higher stocks in mainly in both India and Brazil. U.S. cotton balance sheet, no changes this month. Holding all the supply demand variables unchanged, and price unchanged as well, at a season average 60 cents per pound. All right, sugar is next. I have a few more things to talk about here. Production, as you can see, sugar production lowered this month, 129,000 short tons. That is primarily a reduction in cane, sugar production from cane sugar, as you can see there. And that reflects the early freeze that we saw in February, damaging that crop. That freeze, if you recall, happened just before the February WASDE. We accounted for it partially in the February WASDE, but we didn't have enough data at the time to know the extent of the damage. Now, this is based on what the processors are reporting. So fairly, significant damage relative to what we had been forecasting, bringing cane production down this month, 121,000 short tons. A couple other items to note there. Imports continue to come in fairly strongly. Re-export imports, that is just truing up to the current pace. High tier imports, another increase this month. That reflects two things, both the roughly a little bit more than 40,000 tons that came in of raw sugar that we counted as it came in. And then also the projecting the pace of refined sugar imports for the balance of the year. But again, those high tier imports continue to come in relatively strong, down year over year at this point, but still coming in. Domestic deliveries, we raised this month 117,000 tons, and that is based on a relatively conservative reading of the current pace reported by the processors. So that's where we are with that. And so when accounting for the changes in production, increased imports and increased domestic use, ending stocks trimmed just a bit this month, down 62,000 tons, and the stocks to use ratio falls to 15.2%. Mexico's balance sheet, sugar balance sheet, small changes here. This month, imports reduced 14,000 metric tons, and we know if Mexico's importing sugar, they're not importing it to stock or to export, so they import it for domestic use. So the reduction in imports leads to an equal reduction in domestic use. And then similarly, ending stocks was reduced 14,000 metric tons based on information from the FAS post in Mexico. And then with that tighter ending stocks, exports residually increased by the same amount, 14,000 metric tons, and none of this has any impact on imports or exports to the U.S. All right, so let's now wrap things up with livestock and dairy. Beef production this month, we lowered 110 million pounds, just truing up to recent slaughter rate. We've seen a relative slowdown in relative slower slaughter rate that we had been forecasting, partially offset by higher weights, but that slower slaughter weight is driving the reduction this month, reflecting tight packer margins. So maybe not too much of a surprise there. Pork, on the other hand, no change this month in terms of pork production. We will get a hogs and pigs report at the end of the month, so we'll wait until then to see where we stand and make any changes as necessary in the next WASDE. Broiler production up 200 million this month based on recent hatchery and slaughter data. And turkey production lowered 40 million pounds, also based on hatchery data. and some lingering impacts of HPAI culling. And we expect most of this reduction in our turkey forecast will occur in the second half of the year. Prices, cattle prices continue to be strong. Our steer price forecast, we raised $1.75 per hundredweight this month. So continued strength for cattle, and also we're seeing some strength in the cutout as well. So beef prices up a little bit earlier than normal. They typically do rise seasonally going into spring and summer, but we've seen some earlier strength in those beef prices. So that is also likely supporting the cattle prices as well. Hog prices also up this month, raised $1.25 per hundredweight, seeing strong demand, strong pork demand, and with high beef prices, pork is benefiting from some of that demand strength, price strength in the beef sector, and we're also seeing strong export demand for pork, so that's supporting the prices in the hog complex. Broilers and turkey, broiler price forecast, we lowered 1 penny per pound this month, just based on recent prices, and that lower price is also consistent with higher production. Our turkey price forecast, we raised 1.8 cents per pound, and that's consistent with both tighter supplies and recent HPAI pressures. So global meat trade, U.S. meat trade, I put 2025 last year up there. That finalizes the 2025 trade year. So this is just incorporating this data for December that was recently released. So essentially those trade values, export values for U.S. meat are now final. For 2026, forecasting here, lowered our beef export forecast 30 million pounds, and that reflects lower production in the U.S., especially in the first half of the year. Pork, on the other hand, pork exports, we raised 50 million pounds, seeing some good strength, good export strength, especially to Latin American markets and some East Asian markets as well. In some cases, that strength is coming from reduced competition from the EU, where, as you know, Spain has been grappling with some African swine fever outbreaks, so that's taken some of their exports off the market, leaving more opportunities for U.S. pork. On the import side, beef imports raised again this month, up 100 million pounds. Maybe not too surprising there. Again, in the U.S., tight supplies, strong demand, and relatively high prices, encouraging those imports to come into the U.S., primarily from Australia, Brazil, and New Zealand. Milk and dairy products. So again, now put up last year, 2025, where it reflects a few things on the production side, some revisions in the milk production report for last year. And then on the trade side, fat basis and skim solid basis product trade, just truing up to the December data. So for the most part now that 2025 milk supply and demand balance sheet is complete. For 2026, we raised our milk production forecast 100 million pounds. Again, based on the milk production report, we're seeing growth in cow inventories, with more than offsetting relatively slower growth in milk per cow in this latest report. In terms of dairy product trade, fat basis imports raised this month. That is mainly butter imports, mainly coming in from the EU, specialty butter, coming into the U.S. from the EU. Exports, on the other hand, that is fat basis exports. That's mainly butter and cheese. So we're still competitive in, our prices are competitive for butter and cheese globally. And on the skim solids basis, raised our export forecast. That is mainly cheese and whey. So again, US prices have come up a fair amount, but still competitive globally, supporting that those export outlets. In terms of dairy product prices, as I noted, recent strength in most of the dairy products, strong dairy product demand. We adjusted most of our prices higher this month, cheese, butter, and non-fat dry in particular. Whey a bit lower this month, but still would be up year over year. Milk class prices. No change to our class 3 price forecast this month as higher cheese prices perfectly offset lower whey prices. And the class 4 price is up based on that strength in both butter and non-fat dry milk. And all milk price raised 75 cents per hundredweight this month to $19.70 per hundredweight, which still would be down about $1.47 year over year. And that's where I'm going to end things for today. I think I covered all of the major commodities. Thank you all for attending. I hope I was able to provide you a little bit of insight into what's behind the numbers this month, and thank also those who attended online. We'll see you back here on April 9th. And with that, over to you.